read about the Taco Bell wedding. We've heard about the
Yeah.
Justin Bieber video.
I had or maybe have over 3 million followers in between Oprah Winfrey.
Took me a long time to understand what Pittsburgh stood for.
Fund one was 75 million. We're currently investing out of fund two, which is 150. Fintech is hot again. You know, if you're not a bank, it's actually in some ways better than being a bank. There are more seed deals happening in New York than in San Francisco. Bullshit metrics, what I'll say, like they talk about something that like a proxy for a proxy for a proxy for a proxy for revenue. Just like tell me the damn thing.
Hi, everybody. Sanjay Swamy here again with the Prime Venture Partners podcast. And I have a really good internet friend of mine, and probably of several of you who follow our podcast, the one and only czar of social media in the fintech world, since that's the new word these days, Sheel Mohnot. I think I'm one of the few who has not asked him how to pronounce his last name. I hopefully got it right.
Yeah,
But
good.
welcome,
Great.
Sheel, to the show. I was listening to the TechCrunch podcast the other day, and the lady was saying, "Oh, I wish I'd asked you before the show." But
Yeah. Yeah, great to be on. Excited to chat. It's been a while, so just good to catch up too.
before we get started, I think it'd be great for people to know uh, a bit about you. And it took me a long time to understand what at Pitt Desi stood for. I understood the Desi part. I later realized you're from
Yeah,
Pittsburgh, and so that's what that probably
yeah,
stands
that's
for.
right.
So it's great to have you here, Sheel, and of course, big fans of the quirky posts that you keep putting out on Twitter. But most of them, if you read between the lines, there's some really high quality content as well, and sometimes, of course, very directly. So let's get started. A little bit about your journey and how you got to where you are today, and then we'll talk about your views on the market today.
Yeah, sounds good. So, backstory, I grew up in Pittsburgh, so I'm a Pittsburgh Desi. Have had that screen name. It originates from 1995, so it's
Oh,
it's
wow.
an old one. Um, and you know, I grew up in a household with my parents both grew up in India, but I grew up in Pittsburgh. I was going back to India every, you could say, year or 2 years throughout my childhood. And then, you know, as an adult, I went to Carnegie Mellon University, also in Pittsburgh, and ultimately went into software. I made software for hospitals at a company called Cerner. Um,
Hmm.
then I got into management consulting, ended up spending some time in India, actually, as an adult. I went to India. I was there 2006 and 2007. And I was working in microfinance, living like my borrowers on, I think it was 2,000 rupees a month is what I
Wow.
was,
Which year
you
was
know, all
this?
my expenses, 2006 and 7.
And which part of India?
I was in Ahmedabad.
I see. Okay, wow. Pretty
And
cool.
so it was a great experience, you know, something I never could do today, but in my young age, I was more
You're
capable
still
of doing
young.
such things. Yeah.
It's all relative. But yeah.
It's all relative, I guess. But and then you know, went back to consulting. I worked at BCG, serving financial institutions. A friend of mine had an idea for a company. We ended up starting it, payments company. That company got acquired in 2012. I started doing some angel investing, found I really liked it. Um, Another friend of mine had an idea for a company, said, why don't we do this together? It was an auction company. So ended up starting that company about a year after the exit of the first company. And that company too ended up having some modest success in 2015. And from that point onward, I've been investing and started out investing my own capital. I had joined 500 Startups, ran a fintech focused fund there called 500 Fintech. And then we started BTV about 5.5 years ago now. And BTV stands for Better Tomorrow Ventures. We started fund one was 75 million. Then we're currently investing out of fund two, which is 150, and shortly we'll be investing out of fund three.
Very cool. And broadly, your funds focus on what areas, what geographies, what verticals?
Yeah, so we lead pre-seed and seed rounds in and around fintech. And when I say around fintech or fintech adjacent, what I mean is, there are a lot of businesses which today may not look like fintech companies, but in the future will. As an example, vertical SaaS. So, in the United States, there's a large now public company called Toast that builds
Mhm.
restaurant point of sale software. And when it started out, it was a point of sale company charging $100 per restaurant. And now 83% of their revenue comes from financial services. And we think that there are a lot more opportunities to build businesses like this. And every future vertical SaaS company will have a large component of fintech. And so, maybe you charge $100 a month for your SaaS product, but then you make another $200 on payments, you make money on lending, you make money on banking, accounting, payroll, etc. And,
Mm.
ultimately 80 to 90% of your business is a fintech business.
And do you think all of these companies, I mean, I share a very similar point of view in India. In fact, my partner, any company that's not doing well, they say, okay, I'll just hand it over to Sanjay and he'll turn it into a fintech, kind of as a joke. But, I think that's certainly the one big profit pool. And I think that benefits a lot from digitization of what used to be traditionally offline processes, right? The question I had for you is these are all regulated spaces and traditionally not something that such founders would have a background in, right? And in India, it's becoming certainly more and more clear that you just need to become a regulated entity by the RBI, get an NBFC
Mm.
license, and so on. How is the landscape in the US, and do you see it going more in that direction, or do you think there'll be specialized companies with the sort of an embedded finance type of module that they will be licensing? And is the opportunity there, or is the opportunity in the software company that is targeting the customer, or both? How do you think about it?
Yeah, it's interesting. In the United States, so first of all, as you are very well aware, we had a change in leadership here a couple months
No,
ago,
really?
and and I think it has some implications, which we can cover. But what I'd say overall is it's different than India. So let's just use banking as an example. There are pretty great advantages to not being a bank.
Hmm.
So we can use the neobanks as an example. Chime is the largest of them on the consumer side. So Chime as a neobank, um, the primary they serve a population that does not have a ton of money, like underbanked population, and they're able to actually make a lot more money on this customer than they could if they were an actual bank. And the
Ah,
reason for that is the way that you make money off this customer is interchange when they swipe their debit card. And the United States, about 15 years ago, there was a regulation called the Durbin
the
Amendment
Dodd-Frank.
that,
Durban,
yep,
yeah.
exactly, yes, that regulated how much banks could charge on interchange, and banks with sub $10 billion in deposits were able to charge more on debit interchange than larger banks.
Mhm.
And so it actually, you know, as you scale, um, if you're not a bank, it's actually in some ways better than being a bank. And getting a banking license in this country is a real pain.
Yep,
Um,
it's true
and
everywhere.
so,
It's tough. Yeah,
yeah, it's tough. And we don't exactly have a NBFC equivalent in
construct.
the United States. Yeah, exactly. Um,
That's
and then the same is true in a bunch of other industries. I think there are some areas where, you do want to get regulated. And for example, we have this concept of a money transmitter, and it's kind of strangely still done state by state. And we do encourage our companies to get the money transmitter licenses. So in some cases, we do encourage them to be licensed, but for the most part, it doesn't, the regulatory environment isn't necessarily set up only for regulated entities to succeed.
Got it. Cool. So you expect that fintechs will partner with regulated entities that build a muscle for partnering with the fintechs uh, and plow along much faster and in some ways stay unregulated. Um, what about some of the larger players? Like, all these things work very well when you're small, but when you get to the scale of someone like a Stripe or a Chime as well, isn't there an expectation that they will eventually need to get regulated? So is it a 0 to 1 and 1 to 10 phase where they can get away, or can they stay unregulated forever?
Um, I think it depends on what you mean by regulated. Like,
Hmm.
when I say there's no such thing as an NBFC in the United States, like there's that's mostly true in that, like, you know, we don't have like an RBI regulated
Got it.
NBFC type of thing. But there's like patchwork framework throughout the United States. So um, I mentioned state level regulation for money transmission. So these guys all have that. Then they also have lending licenses in each state in which they offer, in which
Okay.
they're in business. And so they are regulated in some ways, but not via a centralized regulator like in India. It's basically
Got
a
it.
bunch of different layers and fragmented. And then, it can be frustrating also in the United States. Like you might be regulated by the FTC. We talked about the Dodd-Frank Act. There's the Fair Credit Reporting Act, Equal Credit Opportunity Act, the Consumer Financial Protection Bureau, which Trump is eliminating. All these different, and the OCC, which is the Office of the Comptroller of the Currency, which controls banks, FDIC. All these are different regulations. So in some
Right.
ways, like we don't have a centralized regulator, like I think is the case in India, more
Mhm,
so than
mhm.
the United States. Um, but these are all regulated in some way.
Right. Well, so let's move on to some of the areas that are exciting you a lot, right? I think you tweeted recently about SaaS. Is dead or not dead, and it depends on which side of the
Somewhere in the
bed
middle.
you wake
Yeah.
up from. And we're all going through that, this extraordinary excitement around of obviously the foundational layers of AI, but I think some of the applications, we're looking at it. In fact, I finally went and hired engineers to actually build out some tools for us in our own operations. Initially, the finance team just grabbed him and said, "Oh, we need to do all of the MIS reporting and stuff like that." But eventually, of course, I think a lot will get into our own research and underwriting of areas and startups and founders and so on. But in terms of building large companies here around financial services, fintech, and with this whole AI boom that's happening, this whole dynamic of companies moving to a thought process where they could build their own software themselves and probably, build much more targeted offerings. How are you dissecting this whole space, and what scares you, what excites you?
Yeah. So, a lot of folks are saying, okay, SaaS is dead. I don't think it's dead. I don't think that's the right way to think about it. I do think in our own work, what I tweeted about was we were looking, or we are, I should say, still looking at a software to help us manage our own business, to manage information we get
Hmm.
from our portfolio companies. There are a few providers that offer the solution. They're charging like 25 or 30K USD per year. And so we've been thinking, okay, that's a lot of money to spend for software. Like, could we just build it ourselves? So we're starting to prototype, and while I have some technical background, I haven't really built anything in a very long time, 15 plus years. So I started playing with all of these new AI products, and it's pretty impressive what you can do
Yeah.
pretty quickly. And so it feels like if I'm already rethinking a 25K per year contract with somebody, then I might be ahead of the curve a little bit, but there's a lot of that coming. So I do think there's a world in which the the future looks a little bit different and more customized. Um, I I think there are a few things we still think are important to get right. So like if you do invest in SaaS, I think, and we're still trying to figure this out, but what we're looking for is some sort of complexity barrier. So like, is it hard to solve technically, or is it something fairly easy? Um, we have businesses that are, I don't know, like the first thing that came to mind is like there's a business that when you enter into an office, like you enter your name to check in,
Yeah, yeah.
and like
Envoy. Yeah.
that's Envoy, right? And like I'm sure they have many more products now, but it seems like okay, could I build that myself in a relatively short period of time? Yes. Um, what's their right to win? It's not that hard technically, but they might have some other thing. And so the second thing that they probably do have that I'm missing is they have some network effects.
Hmm.
Like they have information about people across buildings and all sorts of stuff like that. So maybe there's an
Don't
advantage
let
there.
Sheel
They
in.
have some
He'll
sort of
always take that third cup of coffee. Yeah.
yeah, exactly, exactly. Um, do they have some sort of integration or workflow stickiness? So this is the thing in my business I think we think about a lot. Is like if we're investing into a company, what's their right to continue existing? And I think it's really where we have landed on is are they embedded into the workflow? So
Yeah.
we have invested a bunch in these, what we call services as software businesses. And we're finding that there's a large demand from these enterprises to adopt AI, and where they want to adopt is where there's a hair on fire problem. If we can't hire enough people to do a particular task, or it's too expensive to do a task, and so we don't do it, that's a big opportunity. I can give you a couple examples. So
Yeah,
we're
please.
investors in a company called Basis. It's
Hmm.
a AI for accounting product, and they ultimately will be doing the work of a junior accountant. And in the United States,
Hmm.
there's a huge accountant shortage. Um, Basically, people, it became very uncool to become an accountant. And so people stopped doing it. Like, even from the time when I graduated college till now, the number of new college graduates in accounting have dropped 50%, but actually the demand is still there more than ever. So there's a strong demand for accountants. We're actually importing them. There's a decent number of H-1Bs that are accountants. But even then, there's a shortage. And so these guys are automating the work of a low-level accountant, and all of the accounting firms want the product. It's like a no-brainer for them. And so that's one. Another is we have a company in the loan underwriting space called Koch.
Hmm.
They do a bunch of work to automate SMB loans. And so what that enables is a lender who previously was taking so much work to do the underwriting, um, it didn't make sense to do a loan under $50,000. Now that
Mm.
lender is able to do a loan that's like $20,000. So it is furthering the business. Then we have
Yeah,
a bunch of
yeah.
others in this sort of broad theme that's like truly automating work.
So it's kind of interesting. Some of these opportunities, at least in India, I mean, obviously, basis is is the core thing, right? I think it's going to be a problem everywhere in the world, especially if a lot of the H-1B start taking all the accountants from India to the US, then we're going to have a shortage on this side of the world. Um,
Yeah, sure. Yeah.
but I think the one thing that happened in India over the last decade, and I had a small role to play in it in the early days, especially, was this whole development of India Stack and a public
Yeah.
infrastructure now with the account aggregator where digitally signed information can be made accessible as JSON, so they're machine readable and verified documents with the uh, you know private with a digitally signed hash, so you can even verify all the information without going back to the source. um, I think the US has still stayed relatively uh, offline focused and certainly proprietary data focused, right? And I think interoperability and openness has sort of happened in many areas, but in many of these financial services areas, it still seems like you have companies like Plaid and the others that did a lot of the connectivity, but it sort of went the path of let's create more large private companies rather than interoperable utilities, right? And is that a fair assessment? And do you see any of that changing, or do you see that's just going to create more opportunities that we could back as a mindset?
Yeah. Yeah. I think the India stack has been obviously phenomenal, but like identity and payments in particular. I think in the United States, there's a lot of inertia not to move in this direction. Um, some of it sort of surprises me, but I think the identity stuff, Americans think of themselves as individualistic and for some reason fight identity, fight national identity in a big way. So people don't want their fingerprints or facial recognition. People fight this in a big way. Um, we have the social security number, but there are no biometrics. So there's a lot
Yeah,
of fraud and identity theft. It, would be much better
which
to
we've
implement
been we've been
a
reading about,
Aadhaar
right?
type
Right or
system.
wrong, at least that's what a lot of stuff has been claimed
Yeah.
of
And
late,
so we're
especially.
still
Yeah.
using state by state driver's licenses
Hmm.
for identity verification. And the reason is this privacy concern that people have, unfortunately. Um, and so it holds us back for sure. But it also allows opportunities for a bunch of these private companies to pop up. And so on the identity side, you have a bunch of companies that have built sizable businesses just managing identity, persona, and many, many others. Um, but yeah, it of course would be much better if we had an Aadhaar type system. And then on the payment side, yeah, like freaking wish we had real time bank to bank
Interbank
payments.
payments. Yep.
Yeah, but look, it's we don't have them because the banks really don't want it.
Yeah.
Like they lose money. They're making money on those 2 days of float. And like that's how they make a lot of money. We have this new payment infrastructure launched, what was it, a year and a half ago called FedNow, which is
Hmm.
a new instant payment infrastructure for real time payments. But it's not mandated. So if it's not mandated, then the banks aren't going to do it because there's no impetus. So the banks that are doing it are mostly like small banks. And so until you mandate it, it's not going to happen. So then what do we have is our ACH automated clearinghouse system, which is slow. And then we have third
Not real
parties.
time.
So like
Yep.
the businesses like PayPal, Venmo, Cash App, why do they exist? How are they existing? It's because we don't have a system like UPI that lets you do it fast and free. And so what these guys do is they primarily make money if I pay you today, it doesn't settle for a few days. But if you want to get paid instantly, then they'll charge you a few percent and you can have the money today, right now.
So that's
Um,
discounting basically. Yeah.
that's right. So that's how these private companies, PayPal, Venmo, PayPal and Venmo is owned by PayPal, but they operate independent apps, and Cash App all operate.
Wonderful, wonderful. So maybe we'll switch gears
And
a
then,
little
sorry,
bit.
you
I
were talking
know,
about
yeah,
account aggregation briefly.
yes, yes.
You guys have a great was it DEPA? How do you is
Yeah,
it
DEPA, DEPA, yeah,
DEPA? Yeah,
yeah.
yeah. Um, that allows
And now the
individuals to
Privacy
control
Act
their
also,
own.
now that the law, it's coming I mean, it's becoming a law now, so it's become a law. So I think the importance of, enforcing it, making sure you can prove that you have not violated it, etc., becomes very important for certainly the large financial institutions. And in India, as I said, everybody is regulated. It might be a different level of regulation, or everybody's getting regulated. So that's creating, I think, a lot of opportunity, and you combine that with some of the new AI stuff going on, and I think it's going to create one big opportunity here for sure. Um, Question
Yeah,
is,
makes sense.
is the market large enough for a company to sustain itself doing only India? There are a few pockets where that's probably true, and then if not, will this be a global wave, and then the Indian startups can find a way to adapt themselves to the international opportunity? That's really the big question we ask when we look at technology or fintechs, so to speak, as opposed to financial services players.
Yeah, even so. So, question for you is like, even with a India-based, fintech-based portfolio, how many of those companies do think about going global? Is it super common even in fintech in India?
So I think global is, I think there's the United
Or maybe
States, there's
US?
Europe, right? And then there's the rest of the world, right? So I think rest of the world probably is much more practical to go to expand into over time. And several of the early, I would say, because the Indian banking system is very mature from a technology adoption perspective. And other countries are looking at India as being a thought leader and saying, can we bring some of this stuff? Because they don't have the expertise necessarily to implement a lot of that.
Yep.
In terms of targeting the US market, for example, I think there is going to be a wave of India-based startups that are going to come after, perhaps unbundling some of the first wave of fintechs that have become, in the tens and hundreds of billions of dollars, right? So I think that there'll be that kind of an opportunity. It will probably start with cross-border, Sheel, as the world moves
Yep.
to China plus one strategies, and then a lot of Indian exporters start exporting to the US, and trade starts going across multiple geographies a lot more from India. So I think there will be cross-border opportunities. We have a startup, for example, that takes its consumer payments for using PayPal, right? And PayPal charges 7%, right? And
Yeah.
they look at the balance sheet and they say, oh, you guys are not really that solid, so we're going to withhold your payments for 90 days, and that starts a domino effect of why the company gets weaker, and then they got to figure out a way to discount invoices. So I think there'll be a lot of that opportunity. As you said, a lot of SaaS companies from India, SaaS, from India for the world. There will be fintech opportunities for them. So I think they can start probably playing, a similar game to some of the things you were mentioning. But launching services for North American businesses, that would probably happen at some point, and coming to the American consumer is probably a long shot. I don't see that happening anytime soon. I mean, there will be certainly people who will attempt it and maybe go after the Indian diaspora in their cross-border dealings, because you need to have some edge when they're trying to go to the consumer, and I think it's a long shot. Now, I could see an Indian origin founder or someone, with your background, perhaps with, close ties to India, setting up a team in India and being a North American founder. I'm discounting those as, Indian startups, right? Those are
Yeah.
really
Yeah.
American
Yeah. Yeah.
startups. Yeah. Yeah.
Yeah. Makes sense. Cool.
But no, I think definitely from, if I look back 10 years ago, the other big thing is I think India is starting to emerge as a market where you could build a company that's doing several tens and possibly hundreds of millions of dollars of revenue. And the IPO markets in India are such that you could IPO as soon as you're sort of north of, say, $60, $70 million of revenue and are profitable. And
Yeah.
certainly and certainly at at 100 million, right? So if the markets stay this way, and I suspect that number will move north over the next decade, but I think there will always be opportunity for well-run, profitable companies growing 30% year on year at that scale to go public, right? So I think this will remain a very attractive market, and unless founders feel that they have a real edge and a reason why they can win in the US, it's unlikely that they will target them. I'd love to see a founder come and say, we'll build, something very, very US focused, because definitely the opportunity scale is really big, and I'll pick up the phone and call you if I meet someone for sure.
Yeah, for sure. Um, yeah, it's interesting. I think like the US equity markets have largely been closed the last few years.
Yep.
And I think to your point on what it takes, like here to attract any attention, you need to be in the 400 million plus
Yeah.
revenue
Yeah.
range. And like we have a couple companies in the 200 plus range that in a previous generation would have been public already.
Hmm.
But
Hmm.
now it's also very expensive to go public here. And
Yep.
it's not a
Yep.
one-time expense, it's an annual thing. So it's tough. And you also see, I think we're seeing in India right now, it feels like the companies are trading at higher multiples than they are in the United States. So
Yeah,
the
maybe
Indian
maybe not the
consumer
last
is pretty
couple of weeks,
excited.
but in general, yes,
Okay.
that's true.
Yeah, yeah, yeah.
But that's the nature of the beast anyway. I think what we look
I
at
mean,
is
good for
saying,
you in liquidity.
I hope so. We should be testing over the next few years. But generally, what our thinking is, can this company get to say 50, $70 million of revenue, be at 25-30% EBITDA, and do that with like a 20-25 million dollars of investment over its journey. And beyond that, will it go public? Will it continue to grow at 40%, 30%, whatever? The timing of the IPO is not necessarily in our hands, but that sort of seems like a goalpost that we can consistently strive to achieve, right, for companies, and that also moderates um, the type of companies we can back. Our stage is slightly after yours. We do mostly pre-Series A.
Yeah.
Valuation wise, the price might be similar from India and the US market in terms of the valuation zones. But I think we have
And so what,
gravitated
what would that be for you? What is the valuation zone?
to say this on a public podcast would be interesting, but it can be anywhere from 6 to 30. So that's the
Okay.
zone. And I would say our median will probably be around 15. Yeah, but
Okay.
we have gone higher depending on how mature the company is, right? So, I mean, the three factors obviously are the team, the opportunity size, uh, the rate at which, I mean, I think I just look for crazy customer love, right? Whoever your early
Yeah.
customers are, whether it's one or three, right? They just have to absolutely say the greatest things about you guys, and
Yeah.
and hopefully there are 3,000 of them who are waiting in
Yeah.
line.
And when companies go public, 60, 70 million of revenue, are we talking somewhere in
10x revenue.
the
If they're profitable,
10x
right?
revenue? Okay.
If they need to. So a rule of thumb is triangulating between 10x revenue and 30x of EBITDA. And if you're
Yeah.
lucky, it could be forward 12 months revenue for both those metrics,
Okay.
right? So if you're doing 60 million and growing at 30% and are at 30% or 25%, let's say EBITDA, then that's about 100. That's about 15 million EBITDA. So 30 times that is about 450 million, 30 to 40 times that. So you kind of get back to more or less the same
Sounds
metric,
right.
right? Or the
Makes
same
sense.
number. Yeah, so that should be somewhere between 500 to 700 million, again, depending on how hot the
Man, how
company
I
is.
wish uh
Come on,
how I wish that were
let's do
true.
stuff together, I guess.
Yeah.
Here, which actually leads me to the question about India, right? I mean, you have strong affiliation here. I wouldn't say roots necessarily, but I'm sure roots as well, or certainly
Yeah, yeah.
offshoots of the roots. How have you looked at this market? I know you've personally done some angel from
Yeah.
time to time. But have you looked at it recently? Do you think it'll be a part of your story, or are you just so laser focused on the US that it just doesn't matter as a fund?
So, I would say it's not a like high priority area for us, but um, totally open to it. I think the challenges I have had are, it feels like the only ways to make money, and tell me if I'm wrong, feels like the ways to make money are as a lender or, maybe increasingly in wealth management or in AUM businesses. And if I look at how our companies make money, it's very different. It's
Mm.
like they charge the customer, that's the best revenue. And then maybe the second best revenue is payments revenue. And then you kind of go down the list, and lending revenue we think of as like the worst type of revenue. And we also think, I personally just feel like I don't I don't quite think it's the right fit for a venture model because, in lending you're giving out money, and the venture model is about growth, and it's easy to grow when you're giving out money. Um, so that's what I've struggled with in India, but not to say that we wouldn't invest or anything like that.
Yep, yep. So I'll tell you a couple of things to keep an eye on, and that has changed a few of our thought processes as well. We actually stayed away from the NBFCs for the longest time because we
Yeah.
just felt that, as an early stage investor, first institutional check in the company, and we're just going to get diluted over time because these things are going to need to raise a ton of capital. And that used to be the model. But over the last 3 years, and we have two, three companies now, one at the infrastructure level, which is Knight Fintech, as well as a couple of NBFCs, Metafin and Navdhan, and also Finite, which is doing retail um, B2B financing. In all of these cases, there is this new concept of co-lending that is coming, which is a very India specific thing as far as I've understood. And what co-lending does is it kind of requires, so earlier, an NBFC used to get wholesale capital at a wholesale from a bank or any other financial institution, and they would lend it out to at a higher price to the customer, and they had these verticals of customers that they understood best, whether it was farming, whether it was small business in rural India, whether it was a certain category of consumers who would be forced to pay higher interest because they didn't have a good credit score or credit rating. But the regulator has sort of started pushing the banks more and more to saying, look, you've got to share in the underwriting and in the upside, which means you've
Hmm.
got to co-lend, right? So at the infrastructure level, what that's done for Knight Fintech is it's created an opportunity to provide a co-lending platform where the banks and all their NBFC partners use the same platform. Because as a consumer, I don't care that your billing date is the 6th of the month and the other guy's billing date is the first Friday of the month. I'm just making one repayment. The fact that the money came from two pockets, please don't make me sign two contracts. Don't make me sign up with, privacy policies of two entities and so on, right? So that whole piece has to be streamlined. And if you're a bank working with, say, 20 large NBFCs and vice versa, those 20 NBFCs are working with five banks, all of a sudden you have this, network effects that, of complexity and point-to-point integrations and stuff like that become an issue. So there's a sort of a middleware play that they inserted themselves very cleverly into. And so that's one side of it. But what it has also done for the NBFCs is that it's given them a lot of leverage, right? And so what we have realized is you probably could get to critical mass, with, 15, $25 million of your own raise, because you're going to
Yeah.
get a lot of leverage, and eventually the profits will start, feeding the contribution that you have to make. So it's made us rethink. We made two, three bets now, and so far they seem to be really exciting companies. But that I could see that as being a model because we're a credit-starved country, and there is no
Yep.
way the large banks are going to be able to serve the customers without sort of dedicated partners who know the customers very well. It's still largely a lot of business is done offline, despite UPI being at 15 billion transactions a month and so on. So I think this process in India will create some sort of unique opportunities. Whether it's replicable in other parts of the world, I don't know. But that's what has given us some feel that there are a lot of lending opportunities to be tech businesses or tech first businesses that will have infinite scale, or at least meaningful enough scale. But we'll see. Um, Switching gears a little bit, Sheel, to um, you know the you guys launched an accelerator, right? And you did a couple of
Yeah.
batches in the Bay Area, and then now you said you were taking it to New York City. So tell us a little bit about how that came about, what the experience has been, and why are you taking the next batch to New York?
Yeah. So my first foray into venture was through accelerators, right? So I had been angel investing, but
Fine.
then I joined 500 startups and I ran a fintech accelerator for a few years. And it was very successful. So Gary Tan recently tweeted that of some particular date, 4.5% of YC companies up to a certain date became unicorns. Our
Hmm.
number actually over 7% of ours did. So we actually like it worked really well.
Uh-huh.
And the fund has been awesome as a result. And so when we started BTV in 2019, it was always part of the plan. We said, let's just replicate the success we had. We would do a few things differently, but by and large, we know how to do it. And so we started, and then obviously the pandemic happened, and so we didn't get to it for a while. And then we finally did it in 2023. The first cohort, it was 7 companies here in San Francisco. And then we've had 2 more cohorts since then. So we've had 3 cohorts. And the idea, and it was partially like we'd had success with it before, partially our own founders who went through it and ended up being successful said, hey, like my friends are starting a company. Where can I send them to have an experience that we had?
Mm.
And what we offer is very different than YC. It's a very hands-on program where we are working closely with the founders. So like we're in the same space every single day. And it's not like you have to prepare your questions for a group session with me with us once a week. It's like tap me on the shoulder, let's jump on the whiteboard.
Yep.
And we bring in a bunch of experts in go to market, design, tech, and others, and along with some great speakers, and the companies have a lot of camaraderie amongst themselves. In the past, we had a company acquire another company in the cohort. Um, so that was the original impetus, and it's gone well. Um, so far, happy with the results. Now, I'll tell you, it's a tremendous amount of time.
Yeah, I was going
So
to
that
ask.
it's a big commitment from us. So we're constantly evaluating, you know, we think that the outcomes so far have been quite good. It's constantly an evaluation of does it make sense from a time perspective? And how do we and the thing is like this is YC is a program that's built for scale. Like they have 200
Yep.
companies in a cohort or whatever it is now. Um, versus we have 6, 7, 8 companies in a cohort. And the nature of what we do will never scale. We don't want it to. But then it's a question of we're constantly evaluating every cohort. Like, did it make sense? Was the juice worth the squeeze? And so far, we felt like yes, it is. Now
Got it. Yep.
I'm going to New York. The next cohort starts in a couple of weeks in New York. And the idea of New York was actually in fintech, United States, San Francisco overall for tech has been the place to be. But New York over the last 5 or 6 years has really become a formidable number 2. And in fintech, it's actually number one. If you look at seed deals, there are more seed deals happening in New York than in San Francisco.
Wow,
So, and the same is true in our
that's
portfolio. We
interesting.
have more
Hmm.
companies in New York than San Francisco. So for us, it just made a lot of sense that we would try to do it there. We have two team members also in New York now, and then I'll be out there for a few months. Um, so yeah, looking forward to it. It's just a really fun time. I love, I kind of miss the operating days, and each of us do. Each Everybody on the team was at one point an operator founder, and you get closer to it. You just get, you know, it's not the same, but when you're in the same space, when you're helping solve a problem that might come up, and it does feel a lot more like operating than investing, and that we love that.
And do you, I mean, I was looking at the YC cohort this time, and felt like there were four companies solving the same problem. Um,
Yeah.
Whereas, do you selectively make sure that they're not directly competing with each other so that there is a willingness or desire to help? I mean, do you just look at every single company and not bother about that? Because there could be uh, helpful or awkward situations depending on how things are.
Yeah. No, we don't invest in competing companies.
Even at the
Certainly,
yeah, at the accelerator stage.
yeah, even at the accelerator stage, what we're doing is so bespoke and hands-on that it's not like I think YC can credibly say like, you know, we're not that involved in what you're doing anyway, so it's fine that we invested in something else. But for us, it just doesn't make sense. It's not how we operate. For better or for worse, you know. But overall, it hasn't really been an issue. Like I can only think of one time in my last several years where I felt like I wanted to invest in a company but couldn't because of a competitive deal in the portfolio.
Mm. Yeah. And in terms of just this accelerators, we keep debating this or some variation of this from time to time because we're also early stage. Um, Once something is in the accelerator and at what point do you say, look, this is a large space and this company is just not executing for whatever reason, but there is somebody else executing and we should perhaps back them? Or would you just, I can understand when it's a main deal, right, where you've gone through the whole diligence, but an accelerator
Yeah,
opportunity, yeah, it's always a tricky one.
it is tricky. I think we would be open to it. We just haven't had to yet.
Got it.
Fortunately.
Yeah.
Could it
Good.
totally can be a sticky situation. I think it's hard to have a blanket rule. It's like you always want to do good by your founders,
Mm.
and sometimes
You have
like
to give up some opportunities also
you
sometimes.
have to give up some opportunities. Yeah. Um, Now, what I'll say is the one time that came to mind where we didn't do a deal because a founder in our portfolio blocked it. In hindsight, that was a great company. It's valued at significant multiple over the round that we would have done. Um, and so that is in some ways a miss, but fortunately, we can sleep okay because the company that blocked it also is doing very
Also is
well.
doing very well. That's good.
Yeah.
Cool. Hey, maybe a little bit of rapid fire and then I don't have too many questions.
Yeah.
But related to startups as well, what's the one thing a founder can tell you in the first meeting or at any point where it's a turn off for you?
So many things. There's
Okay,
lies.
let's have the list.
There's
Yeah.
there's bullshit metrics, what I'll say. Like they talk about something that like a proxy for a proxy for a proxy for a proxy for revenue. Just like tell me the damn thing.
Hmm.
Um, Arrogance, um, all those things I think are turnoffs for me.
Yeah. 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 To me, I feel it's the one thing you said, right? When you don't when it feels like they don't really believe what they're saying. Um,
Yeah.
and that translates to a lot of the other things that you just said, right? Where we try to cover things up. Um, I personally, well, maybe I shouldn't give this out here, but I read eyes a lot. And I always feel
Mm,
that, the mouth can tell all the lies, but the eyes cannot. So,
yeah.
look at me in the eye. I do stare people down, and maybe makes them a bit uncomfortable. But to me, it feels like, look, I just want to know that you believe what you're saying, right? Who knows what the future is going to hold, but at least if you seem to have conviction of what you're trying to build, that's a start, and that's a great start because at the early stage, I mean, if the founders themselves sort of shifty or uncertain about I don't, I mean, of the clarity of their beliefs, right? Forget about, they
Yeah.
may pivot one day later, but that's fine, right? But at any point in time, you've got to believe that this is the best thing you're working on. And what gets you super excited about a startup?
It's just like a founder makes me believe in them, believe in the opportunity, and is just executing so fast and hard at it. So I think, a couple things that I think about as all great founders we've backed have, and that's, number one is speed of execution. That's something we can generally see, in between our first and second meeting.
Hmm.
I try
Hmm.
to understand, hey, what have you done? And it's a good indicator. And then tenacity, like are they breaking through walls? Like what's a challenge you've had that you had to overcome? Those are things I think if I see some combination of those two things and intellect and a bigger market opportunity, I get really excited.
And for deals that you do go through, what is the typical elapsed time, and how many meetings do they have with you guys during that period of time?
It varies widely. It's really like we don't have a set process. We like when people, which can be frustrating when founders ask us, but it's really like, how long does it take for me to earn to get to conviction?
Mm.
And in some cases, I've basically gotten there in one meeting, but you still, of course, want to have a couple more meetings. But in some cases, it's taken me weeks, months. In fact, in one case, I invested in a company that I met after a year and a half. So
Yep,
it
yep. We've done that too.
really
So yeah.
it
In
so
fact, we're right now looking
there's
at a
no
company that went to IC and we passed, and they've done clearly very, very well. And we're revisiting it. And the two, three things that we were concerned about, well, they've obviously proven that they should not have been concerns of ours. And this is a business that humbles you so fast. It's not funny, and every time you think you have figured it
totally.
out, something new will happen. In fact, the other day I was telling somebody, with 40 odd companies in the portfolio, every day somebody's having a good day, somebody's having an average day, and probably several are having a crappy day, right? And so when I
Yeah.
wake up in the morning, I look at my WhatsApp messages. If somebody's given me good news, I'm actually shuddering for the rest of the day. But if somebody's given me bad news, I say, now I've got something to look forward to today, where somebody is going to hopefully save the day, right? So, and make me feel better. So if I get good news in the mornings, I just go back to sleep, don't look at the phone anymore. But
That's it. Yeah. It's great.
it's just sort of the opposite of how one would think, right? Normally you'd say, "Oh, this is probably
Yeah.
good news day," but there is no such thing. Um, Look, Sheila, I can keep on going on and on, but I'd love for you to maybe leave a couple of nuggets for founders in terms of uh, you know the markets today, the funding climate, what you're seeing as global trends, and if you were a founder, what would you be focusing on?
Yeah. So what I'll say is fintech is hot again. It was uh, it was pretty rough for a while. I think, 21, everything was sky's the limit. 22 and 23 were overcorrected. And then 24, things are looking good. And in 25, actually, we had so far already in 25, actually in the first 6 weeks of 2025, we had 10 companies in our portfolio raise up rounds,
Wow.
which is just like a crazy number. Usually you would have like one or two or three in a month. So it's anyway, it's been busy. So the outlook for fintech, I think, is improving quite a bit. We're seeing a lot of the generalist funds who were out on fintech a year ago. They were saying, "Oh, now we're investing in AI enterprise, vertical SaaS, whatever the topic was." They're back, and a year ago when I would send them a deal, they would say, "Sorry, we're not looking at that." And then now they're saying, "Hey, what's in your portfolio? What can we invest in?" So I'll say fintech is exciting.
That's great
Um,
to hear.
yeah. What were the other questions?
No, I think just generally, advice to founders, right? Just, the last few years has been around, look, focus on growing into your valuation, focus on getting to break even, focus on, um, stuff like that. So where do you see, is it back to thinking about growth? Is it back to thinking about aggressive growth? Um, what is the advice you give founders?
Yeah. So yeah, we've totally moved from growth only mindset in 2021 to profit only mindset in 2022, and that was an overcorrection. Um, I I think now we're probably somewhere in the middle, where you do need to look as venture capitalists. We're investing in growth. Like we're investing in a company. We're investing in the what's happening 5 years from now, and we want to be able to see that you've grown. Um, and so it's simply not exciting if you're not growing fast. Um, but what's new is I'm increasingly worried about these companies that are growing really fast. Like you have a bunch
Mm,
of companies that grew from 0 to 100 million in less than 2 years. Um, but I'm worried about how sticky is this revenue, and that's something I probably never used to worry about before.
yeah,
But I
yeah,
think a lot of this AI revenue is not that sticky. Um,
I agree. Mhm.
I I would say in terms of like other advice, it's really, you know, solve real problems and spend time with your customers, understanding that it's a clear, painful process, a painful challenge that they're facing. Um, think through distribution very early. How are you going to get to these people? Um, Make sure that you'll be able to get great unit economics at scale and, you know, don't overlook both the risk and the regulatory environment that you're in.
Cool. Well, that's really good and serious advice. Maybe we'll close with a little bit of some of your extraordinary fun experiences in life, Sheel. Read about the Taco Bell wedding. We've heard about the
Yeah.
Justin Bieber video. We've heard
Yeah.
about, you remember, you talked about Clubhouse. I had to scratch my head saying, yeah, that did exist during the pandemic, right?
Yeah.
So
Yeah. It was a
pick any
big
one
deal
of
back
those
then.
or a couple of them, and it would be great to hear from you firsthand. I really appreciate the time you spent with us, but maybe we can close with something fun for our audience here.
Sure. Sure. I can link it all together actually. So,
Okay, even better.
so Clubhouse was a audio based, or I should say is, I believe. Clubhouse is an audio based social network,
I
but
think it's
really
okay
had
to
its
say was
heyday.
in this particular case.
Yeah, yeah. Had its heyday in 2020 and 2021, and I was a very avid early user. So I joined when I think it was in the first few hundred people, and just in the pandemic, I was super bored. I'm an extrovert, so I love talking to people and was just enjoying talking to people on there. Ended up becoming, you know, as that platform grew, uh, so did my following. I think I had or maybe have over 3 million followers on that app, which is not worth a damn today. But um, hey, it's funny. There were lists of like the most followed people, and I was like in between Oprah Winfrey and some I don't know some
Holy
famous
cow.
musician, something like
That
that.
is
It's
something.
crazy. But how it links to the other stuff is so during the pandemic, I was in a Zoom dating show called the Zoom Bachelor, and in Clubhouse, I went on Clubhouse to discuss it after the show, and this guy was in there who had watched it, Scooter Braun. He was Justin Bieber's manager. And it was like, oh,
Hmm.
what are you working on? And he said he enjoyed the show, whatever. He said, oh, why don't you come on this music video? And so I ended up sending him something and getting in this Justin Bieber music video.
We got to get the clip and then put it to the promos here for
Yeah.
our thing. And how did the
Yeah.
Taco Bell wedding happen?
So we got engaged, and I had posted on Twitter or whatever, and then Taco Bell had this contest. We'd love to host a one lucky couple's wedding in the metaverse. And this was kind of at this point, like I was never bought into the metaverse to begin with, but at this point it was kind of on the waning end. It was August of 2022.
Mhm.
And but I love Taco Bell. So I was on a road trip with my wife, and I said, hey, there's this contest. I think we should do it. They'll pay for our wedding. Of course, it was one of many weddings. It wasn't our, main wedding, but
That I
we,
followed a few of them around the world,
yeah,
on social
we,
media.
we, so we submitted a 2 minute video. I just thought it'd be funny to submit a video. We submitted a video, and then we thought, okay, we'll submit it because it's fun to make the video, but if they choose us, we'll say no. And then once they chose us, they convinced us. They said, it'll be your wedding. It'll be an Indian wedding. You
You know,
can bring on whoever you want, and you'll be part of the Taco Bell family for life. So I said, how could I
that's
say
funny.
no to being
That's
part of the
interesting.
Taco Bell family for life? And they've been great. They've taken us to concerts, to the Super Bowl, a lot of other stuff.
Wow.
Um, so it's been fun. And actually, one cool thing as it relates to business is actually I was able to introduce them to a company recently, a fintech company that has actually I don't want to say what the product is, but could be very relevant for them, which is kind of cool.
Very nice. Amazing. I have a funny Taco Bell story as well. I just gotten married as a student, had no money, and there was a Taco Bell just around the corner that my wife and I used to patronize. But we said, let's go out for a long romantic drive. So we drove 125 miles around Lake Washington, went all the way around, and came back to the same
Wow.
Taco Bell and then had a $5 dinner.
Nice.
So we keep remembering it. But those are the fun days too. And I think sometimes uh, yeah, yeah, these experiences, as unique as they are, of course, yours are like extraordinary. Going to set a very high bar for your entrepreneurs, I'm sure. Uh,
Yeah.
Sheel, always a pleasure chatting. I think we could go on forever, but really appreciate you making the time. I know it's in the evening your time on a Sunday, but look forward to continuing to stay in touch. Following you on Twitter for our audience, of course, will tag at Pit Desi and certainly, recommend everybody who's just out to have some fun, to follow Sheel on Twitter for sure. I don't know if his LinkedIn posts are the same, sometimes a little more
A little
company
more
building,
professional on
a little
LinkedIn.
more
Yeah.
professional, which is not really what what he's the most famous for on social media. I think it's the wacky humor that keeps all of us going. Really appreciate it and look forward to catching up soon in person.
Dear listeners, thank you for listening to this episode of the podcast. Subscribe now on your favorite podcast app for free, and you'll be the first one to know when new episodes are available. Just search for Prime Venture Partners Podcast in Apple Podcast, Spotify, Castbox, or however you get your podcasts. Then hit subscribe. And if you have enjoyed the show, we would be really grateful if you leave us a review on Apple Podcast. To read the full transcript, find the link in the show notes.